The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning. Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the Max Out Savings Show. Our show is all about saving money, building up wealth, and understanding the rapidly changing world we live in today. Our motto and our philosophy is to save aggressively and invest conservatively. That's save aggressively, invest conservatively. That's the key to building up wealth over the long term. You want to be saving at least 10% plus the company match, gets you around 13, 14%. Those are really where the numbers say that you need to be for retirement. And this is regardless of income. If you're making $30,000 or $300,000, the math is still the same. Because keep in mind, the person making $30,000 is living pretty frugally. And the person, is at $300,000 is probably spending a lot more money, so he needs more money at retirement. And so, I almost think it's easier for a lower middle class income person if they can just put away the 10% plus the company match to build up a good retirement for themselves than wealthier people in a way, just because of that, because they tend to need wealthier people. They tend to need so much more money at retirement. And they don't quite have some of the safety nets that lower middle income people have that will assist them as well. And so neither of them. I mean, the wealthier person really doesn't have any excuse at all. And so this is something you want to continue to work on. Build up retirement, save money. We've got a lot to talk about on the show today. As always, we've got the election coming up. We have the situation with the Federal Reserve cut interest rates 50 basis points, and we have the wars around the world. We have just an incredibly volatile market, an incredibly volatile world we live in. It's unlike anything I've ever seen, and I've been around quite a while. And so this creates dangers to your retirement and to your savings and to your standard of living, but it also creates opportunities. And so we want to try to bring some of these things into you today to kind of understand what's going on, where we're going from here. So let's just hit that. I just want to touch base on the Federal Reserve cutting 50 basis points. This is something that we discussed in recent Max Out Savings shows, and we've been saying we thought it'd be 50 basis points. A couple of thoughts on that. But first of all, I want to kind of give you sort of so you can understand the situation. The federal funds rate back in April of 2022, which is, about 2 years ago, 2.5 years ago, something like that. Fed funds, guess what? The Fed funds right now, well, it's at 5.33%. They cut it 0.5%. So it's I don't know, let's say, 4.8%, something like that. Guess what it was 2.5 years ago? It was just, at the beginning of the week, it was at 5.33%. There's a hint. Okay, in April of 22, it was at 0.33%. Let me just reiterate that, since some of y'all probably thinking you didn't hear that correctly. It was at 0.33%. So the Federal Reserve has raised interest rates 5%. Remember, inflation topped out at 9%. on a monthly annualized basis, which was extraordinary considering that CPI number has been hedonically adjusted and chained down and everything they can to make it to eliminate the true inflation number. And so we raised interest rates about 500 basis points or 5%. And so this is the first drop we've seen. A couple of thoughts. We said we thought it'd be 50 basis points just because they're so high right now. And if there is a problem, might as well get in front of it because, quite frankly, a quarter point isn't do anything. But I think the real reason, this is an important thing to understand, is, look, the economy, well, it depends on what economy you look at. If you look under the numbers and you do the numbers, the economy is not doing well at all. It appears to be slowing down. If you listen to the Biden administration and get their numbers that are as they come out on a reported basis, not the numbers that are adjusted beforehand, but the numbers as they come out, you would think the economy is good. So a couple things. Clearly, the Federal Reserve is saying, look, we don't believe Biden's numbers. They have to readjust most of the employment numbers the next month down. I think 9 of the last 12 months they've had to adjust them down very substantially. So clearly they're lying. But that's no surprise to anybody that's looked at politics in the Biden administration at all. And but there's another reason as well, and this is important, is the Federal Reserve, the Treasury Department, or Janet Yellen, has really front-loaded a lot of our borrowing. Keep in mind, this is what we repeat on this show a lot lately, is every 100 days the Treasury has been borrowing an additional $1 trillion. I think it was Senator Edward Dirksen said, $1 billion here and $1 billion there. Pretty soon it adds up to big money. And now we're talking trillion here and trillion there, which is 1,000 times more, which is truly extraordinary. So they've been front-loading the borrowing. So they're borrowing in 90-day T-bills. They're buying in 1-year treasuries, 2-year treasuries, 3-year treasuries. That's where the bulk of the borrowing is all going. Well, the problem they're running into is our deficits are the only thing that's really – our deficit spending is starting to surpass the military budget for interest spending, and the only thing higher is the entitlement programs. And so, if you look at it, it's the second biggest expense to the United States of America. When you're borrowing $1 trillion every 100 days, approximately, sometimes it's 90 days, sometimes 120. At the same time, remember, the Biden administration for the Ukraine war, to defeat Russia and oust Putin, decided they were going to confiscate Russia's foreign exchange reserves or freeze them. Let's put a nicer way to say it. As soon as they did that, everyone else in the world realized that they had to get out of treasuries because their money could be frozen too. So the Arabs are selling. The Japanese are selling some, and the Chinese have been dumping all their treasuries. So who's going to borrow all this money? So if the deficit is going up, the best way they can reduce this deficit is to force down the Fed funds rate, so to cut the borrowing costs. And I think this is the main reason they're trying to force this rate down now. I think if we didn't have these $1 trillion borrowing, there'd have been no Fed cut, because the economy clearly isn't weak enough for a half a point cut. That's typically done in like emergency situations, like long-term credit, the 2008 great financial crisis, or when rates are at 10%. Well, let me pull the numbers here. Bear with me just a second. Pull this. Fed funds was at 17-18%. At that point in time, you did it. The interesting thing, the percent Fed funds rate is that's been about the higher end. I mean, if you look at the 70s, in the 70s, the Fed funds rate went to 9% one time, and then in 73, 74, 12, and then the 80s it went to 12 to 17, 2 or 3 times, up to 83, 84, and then in 84, went to about 11%, and then 10% in 88. And in 2000, it was as high as about, it looks like about 6%, 6.5%, and then 2006 and 7, it was really at 5%. So it's about the same place it was back then. But the difference is our debt levels are materially higher. So if you can jam down and eliminate a third, cut it to maybe 3.5%, you're looking at maybe cutting, you might be able to get 30% off of your interest costs on your short-term money going out, maybe 2 years, which is gigantic in reducing the deficit. So that's what that's what I think we're seeing here. A couple thoughts on this. The Wall Street Journal, typically, what is the market? Everyone's like, look, wow, 50 basis point cut. This is usually the start of bull markets. This is fantastic. It's off to the races again. Well, typically, if you look at markets 12 months before a Fed cut, the market is generally down 5 to 10%, sometimes more, ahead of it. Well, and then it kind of goes up a little bit, sometimes 5. It goes up maybe going into it. Let's just put it averages about a 6% increase 12 months ahead of the time. So it's up a little bit, and then it starts selling off about 2 months before the rate increase. Until it's clear that what's going to happen. This time, if you look at it, the market has gone up 25% in the last 12 months. So everybody and their dog is invested in the market to take advantage of the Fed rate cut this time, which is very unusual. And now, the alternative after the 12 months, it's real simple. If there's no recession, the market goes up about 14%. If there is a recession, it goes down about 15%. So those are kind of the numbers. I mean, if you had to ask me, it's leaning more to the negative side, just because so much has already been built into the market, even with no rate cut. Everybody's already anticipating it. So really, why the half a point? A couple things, as we talked about. They're trying to get ahead of the market, but at the same time, we're massive amounts of super expensive money. And if they can cut the rates 0.5% or down maybe 1.5%, keep in mind 1.5% on $1 trillion, it works out to be, what is that? That's like, what's it, 15 billion? It's like $15 billion in savings. So that's on every trillion. We've got $35 trillion worth of debt here. So just run the numbers here. So we're not out of this woods. What we think is going to happen is we're coming in, again, borrowing $1 trillion every 100 days, just boom, 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 spend the money. Hey, this is great, nothing to see here. The United States is going to hit a wall, and likely it's going to be next year. And when they do, they're going to come up with this budget, Donald Trump or Kamala Harris, hey, we're doing this, we're doing that, we're cutting rates, we're doing this. Taxes are going down. It's going to be a freebie for everything. And what's going to happen is all of a sudden the dollar is going to start plunging. Interest rates are going to start going up, and they're going to go, whoa, we're not financing this. And you could see an issue within the Treasury market, or you could see the dollar start plunging. In either case, that's going to be very negative. So that is going to look. This is the good news. What you have to understand is we have to have some type of crisis to rein in this utterly out of control spending. If you look at Donald Trump, he's put in some pretty tough people. Donald Trump Jr., RFK, Tulsi Gabbard. These people, they want to change things. Elon Musk wants an efficiency kit. They sort of have a plan to reduce government spending. I mean, I could save us a fortune just walking over the drug companies and negotiating the prices on their ridiculous drugs. And so all of these, but they have a genuine plan. If you look at Kamala, she's just out there spreading the joy. She's become a modern-day messiah. Why can't we all get along with your neighbor, love your neighbor? I'm spreading joy. I'm like, what the hell is that? But this has to happen, because if these guys come up and they go, hey, we're going to do this, we're going to do that, there's going to be massive pushback, and the lobbyists are going to sit there and get in front of them, and nothing is going to happen. And so, but if you get that crisis, you can go to those lobbyists, hey, step back. Now, we're coming at a quick commercial, but I want to give you one more bit of information. It's real interesting. I heard on Bloomberg they were talking about the parties, and they said, look, if Trump's gone, what happens? And I tell you what, I'm going to give you the answer to that. It was a fascinating answer. Trump's not going anywhere, but you need to understand what type of government we had, what type of economy, and where we're going from here. We'll be right back after this right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings investments in your retirement. So we're talking about the economy. And again, this affects your retirement. This affects your savings. This is going to affect your standard of living with this out-of-control spending. It's I was listening to Bloomberg, and they were asking that, I asked a question. They had this expert on there, and he said a couple interesting things. But one of them was, well, as far as if something happens to Trump, does this all go away? And their answer is no, it doesn't, because this is fundamentally changing things. If you look over the last 25 years or so, maybe longer, the Republican Party has gone out to its base and promised them everything from no abortions to middle-class tax cuts all over the place to we're going to cut spending, all types of things they were going to do. And then as soon as they got back in power, they started governing from their donor class, which was their super wealthy people that were giving, okay, stick with me, Charles. They were giving $100,000, $1 million, putting $1 million in tax and whatever. The drug companies, the military industrial complex. Everybody that had something, a dog in the hunt, so to speak, in Washington was giving massive amounts of money, and they were getting so the Republicans would govern to those people. So you didn't see the middle class tax cuts. You never saw them negotiate on drug prices. You never saw them do what they said they were going to do. And he said people have gotten wise to that. And he said, look, so what Trump has done is Trump has raised all this money from average people. So when you're sitting in $20 or $50 to Donald Trump, what you're doing is you're letting him go in there and govern for you because he doesn't need these big PAC money and stuff like that. So I think they're going to make changes. I think Donald Trump has put together a remarkable coalition. I think people still don't understand it. I think it is a big tent. It's for working people. It's for restructuring the United States. It's for making our government more efficient, making it work. Go and make it plan for the future, and to rebuild. We have been just stuck for the last 20 years on many of these issues. So this is a game changer going forward. And as we said, look, the polls are shifting. Donald Trump is getting ahead. He's pulling in different groups of people out there. He's pulling in minorities. He's pulling in more the independents. He's pulling the RFK people. He's building a big coalition. We think he's going to win. He's gaining momentum. The only question is, can he win by enough to overcome the Democratic cheating? And they're desperately trying to force illegal aliens to vote in things, which is they're going to try to rig the election, and that's going to be the tough thing to see. Tell you what, let's take a call to 713-339-1070. Hello from Charles. Hey, Charles, how are you doing?
Good morning, Ted. In the past, you've spoken about gold and silver primarily, but I've never heard you speak anything about other metals like rhodium or platinum, especially platinum. And I wanted to know what's been the performance of these relative to gold, and what are your thoughts going forward on these metals?
That's a good question. I was talking to an expert in physical gold and silver sales last week, and actually, we're talking back and forth, and he said he liked the platinum, palladium. He thought they're lagging the gold and the silver right now. Platinum has been down some because they're used as catalytic converters, as a catalyst in catalytic converters for cars, in gasoline cars, and the theory being that's going away. But keep in mind, platinum is also used for jewelry. Platinum right now is about $981 an ounce versus $2,600 for gold. I think you can buy those right here.
Charles.
That's a good point.
Yeah, I guess the thing of it is so what you're suggesting is that if it turns out that the EV market tends to be put on the back burner for a time, then it would seem to me, then based on what you're saying, that the demand for platinum would obviously then tend to want to go up, right? I mean, I don't know the GMs and the Fords. I don't know where I guess they're still locked into producing all these EVs and everything. I don't know if, based on the demand, the market demand, if they've scaled some of that stuff back, or they're thinking of scaling it back because people still want their gasoline cars.
They're going to be buying more of it. And I'll tell you the other thing, I think you're going to see some shifting in jewelry. I mean, platinum is, has really been viewed pretty much as the same as gold, but it's, less than half the price. Yet in this environment with gold is going up as much. I think, look, we're looking at platinum and palladium for our clients. We're kind of studying that because I think it's lagging and I think it's going to go up. Look, it's and thanks for the call, Charles. That's actually a really good point. Because this precious metals move, we have been talking about this for years. Is really it's happening. It's gold has outproduced the S&P 500. It's outperformed the Magnificent Seven this year. There's some studies going back, 5 or 10. I think it's 10 years or something where it's outproduced the market, outperformed the market, the S&P 500. But the problem is when you have $10 trillion worth of borrowing every month, every 100 days, where's this money going to come from? They can't control spending, and so is inflation going away? And most people don't believe it. Central banks around the world, look, the number two holding in central banks right now is gold. It used to be the euro. They're reducing euro and their dollars. They're buying gold in different platinum and commodities and things like that. So this move is for real. And I tell you, an interesting thing is here, for our clients, we hold a number of the precious metal stocks. We're not. I'm looking at them. They seem to be behind. I'm just looking at some. This isn't a recommendation or anything. This is some numbers I scratched out. It was. I think Kinross Gold had 100% growth in 23, 39% in 24, and 25, 19%. The Newmont had a down year in 23, 15%, but 91 increase in 24, 22% increase in earnings. If you look at Barrick Gold, if you look at that one, it's 12% in 23, 52% growth in 24, 32% growth in 25. And some of these stocks, they're 14 times earnings, and the numbers are going up, and it looks like they're going to have to continue to raise numbers in many of these gold companies. The gold companies, as we've talked about, the precious metals, gold and silver. Excuse me, let me get some coffee here. The gold and silver stocks, I think are really very. They're this year. They're kind of where the oil company stocks were in 2020. Oil prices were down, and it's actually before that, oil prices were down. They weren't making any money, and then every single time oil prices went up, they'd flood the market with oil. Oil prices would plunge down. Everyone would get in trouble. They'd be over-leveraged. And so now these companies, they're not producing as much oil. They're buying back stock instead. They're cutting, they're keeping their capex kind of level. And when they're making more money when oil goes up, they're buying back stock. They're paying out dividends instead because they're trying to grow for growth. Gold and silver, it's interesting. There hasn't been a lot of. There's not been a lot of new mines found at all. Very few, as a matter of fact. So some of them are doing some mergers and things like that, but they're really trying to generate profits.
So, Ted, let me ask you one last question real quick.
Yeah.
What are your thoughts on this Constellation Microsoft thing with the 9 Mile Island, uranium and all that business? Do you think you see this going forward?
Yeah. The 3 Mile Island, and what that is, Charles, is they have a nuclear facility there that's been mothballed for years, and Microsoft and the other companies are saying, look, we need the power. Can you turn it back on? And you turn on a nuclear power plant. If you think about it, you're getting no additional CO2. You're getting no demand on oil or gas. You're not building a solar farm that's taking up 5,000 acres or 10 or I don't know, for a nuclear power plant, you're probably looking at tens of thousands of acres. You're not putting windmills all over the place. The nuclear was always the best way to go. And so I think this is very serious. I think the demand is skyrocketing for electricity for two things: electric cars and artificial intelligence, data centers. And so, yeah, I think this is, we're seeing big changes in here overall. I'm actually, if the United States could get their financial act together and straighten up the country and really clean up this corruption and crony capitalism and this just ridiculous waste of, in the last 4 years, if there's been one between wars and corruption and malfeasance and incompetence, if there's been $1 wasted, there's been $1 trillion minimum. Think what you could do with $1 trillion. We can rebuild, we can put across the U.S. high-speed train system, and Elon Musk talks about this. There are so many opportunities in the world today if we can get these clowns out of Washington, these people that have their hands in the pocket of the United States government at the expense of the taxpayers. It's a game changer, and Donald Trump has put that coalition together. And I don't really think people really understand what he's doing yet. It's not the old Donald Trump with a bunch, with his old cronies, Rudy Giuliani and the rest of the crowd. This is a group of people that want to fundamentally remake the United States of America. It's exciting. So those are a few things. So these gold, we like the gold stocks because these earnings are going to have to come up, we believe. We like that sector. The energy sector looks, I'm a little worried. Oil prices are down here, and I think we should see some pretty good. If you look at oil prices, they're down, and the big oils have held up pretty well. We're watching that closely, trying to figure out what's going on there. My gut on this whole thing is they're trying to keep oil and gas down, gasoline down right now for the election. And I've said this, I think after the election it starts going back up. I think the Arabs, nobody wants it. Look, if you talk to most people, it's 50-50 who's going to win. I think it's going to be Donald Trump pretty clearly. But people are like, which way do I go here? Well, nobody wants to really alienate the Biden-Harris administration, because they're not sure. So if you're the Arabs, you're going to kind of maybe hold back a little or put a little more production on the market here. If you're the big oil companies here, you're going to make sure you're putting a lot of gasoline in the market, a lot of diesel fuel. I give an example. The turnarounds in refineries, which is just a fancy way for saying, once a year they put repairs on in the refineries, kind of upgrade the products. They'll shut them down for a week or two, fix up everything they need to do. Those are near record lows right now. Are these refineries running much better than people think? No. Look, a lot of these guys go, look, let's just keep producing that gas. We want to keep it, throwing it on the market. We don't want to alienate the administration. I mean, look what Elon Musk is having to put up with. The SEC's investigating him. The FAA is they're trying to monitor his rockets. I mean, he is so far into the future, most people don't even know what he's doing, and the federal government's in there trying to sit there and slow him down at every turn. Like they have no idea what they're doing. These are big issues. I mean, if you look at Boeing might have to raise capital in here. The federal government has been all over Boeing for their safety issues. Look, let me tell you something. Boeing knows they have safety issues. They're going to put together a plane, and they're going to make it work. I mean, candidly, for the hatch that fell off really didn't have anything with building the plane. That had to do with servicing the plane if you study it. And yet that needs to be improved. But you don't shut down production of the thing. They're crippling Boeing. Boeing's got, I think, $40 billion worth of debt. What is it? Airbus has virtually no debt. I mean, it's becoming harder and harder in the United States to build things and make things because the government is all over the place with a bunch of bureaucrats. I tell you the reason why technology does so well. You really want to know in the United States and America. Because technology can always stay ahead of the government. So the government doesn't exactly know what they're doing, so they can operate fluidly, and they don't have the government looking over their neck, breathing down their neck, trying to figure out, what can they do, how can they regulate it. So as long as they're ahead of the government, they can innovate. The minute the government is in their business, the innovation shuts down. I mean, if you look what happens to let me tell you something. There's very smart people in Russia. There's very smart people in China. There's very smart people in India. In many cases, I can make a case they're smarter than Americans, and yet all the advances come out of the United States because we have the freedom to innovate, the freedom to say things, the freedom to talk, to discuss things, and the freedom to build things. And you don't have the government trying to approve it. Well, is this or that? Keep in mind, it wouldn't surprise me if Elon Musk opens up a launch facility in Argentina. Watch what's going to happen next. I mean, because the people of the future need to be places where the government is out of their way. Elon Musk, I mean, they're just going after him. Any Republican, any businessman that supports Trump, they're going after him. That is profoundly anti-American. If 50 years ago, 40 years ago, I mean, people would, if the government did that, they would storm the agency with pitchforks, literally. I mean, because that would be so horrific that government would be engaged in political lawfare, which would be so horrific that the American people couldn't even imagine something like that happening. And yet here these clowns are in Washington just doing that, trying to threaten everybody, but they're going to lose. Trump is pulling ahead. And I think this is the market starting to sense this. If Kamala wins this election, this market is going down. I mean, you want to just own precious metals, and that's it, and start looking to move your assets out of the United States. Don't get me wrong. I'm not saying all your assets or anything, but I think we'll have to recognize it's probably over for the United States for a while. When things go badly, they tend to go badly for decades. It tends to be, you look at Venezuela, you look at what's happened in Lebanon, if you look at places like that, if you look at what happened in look at the Ukraine, look at all these places, Cuba, it's 50 years. And so it's really frightening. So tell you what, Let me hit on one more interesting thing here. This week, Israel launched an attack against Hezbollah using pagers. It's actually a brilliant strategy, very successful. I fear they've opened Pandora's box. I think that's going to be I think we're going to be hearing about this 20, 30, 50 years from now. I think it's going to possibly alter supply chains, the weaponization of technology. If you're a technologically driven society to the United States is a frightening thing. Basically what Israel did could probably take down airlines all day long, and it's like people are going to have to guarantee where their technology is coming from. You're going to have to lock down your supply chains. If you're the Pentagon, if you're a big corporation, if China wants to wreck the United States, all they do is slip in little plastic into the batteries of Apple computers, or that are being produced over there. How do we know? And I think it was a brilliant strategy. I think it was kind of like Hiroshima. Yeah, it worked, but it kind of opened Pandora's box, and so it's kind of disappointing along those lines. I mean, it's just we support Israel, but sometimes you have to draw the line, and it probably should have been drawn a little before that happened. But it is what it is. Tell you what, let's take a quick break. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement. This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings, investments, and your retirement here on the show. And how to deal with the world today. As we've been talking about the elections coming up, the reason we're talking so much about the elections, we really think everything in the world is kind of revolving around this election. I think Israel's trying to get this thing solved, their issue solved with Hamas and the Hezbollah before the election. If you look at the Ukrainians are trying to press the issue to try to force Putin to do something so they can react before Trump gets in there and tries to sit there and settle this and have peace talks. I think a lot of people around the world, as we talk about, we think oil prices are basically, gasoline prices are low because of the election. I think a lot of the economic numbers we're hearing are complete BS. Because the administration, and quite frankly, any administration, although it seems to be extreme in this administration, is going to try to put their best foot forward and make the numbers look good. It's a question you have to ask yourself: what happens after the election? I really think they're trying to push up the stock market. I think they talked to these big tech companies and convinced them to buy as much stock as possible in their own companies to push the markets up. I think that they pressured a lot of the major companies to talk up the economy in their earnings calls. That's what I would do. I mean, I would leave no base uncovered in creating an illusion the economy is good if I'm running for president. And they're doing the same thing. I wouldn't cheat like they are, but so we're talking a lot about these issues, but I think afterwards you have to ask yourself what's going to happen then. Then they don't care. Look, once the election's over, November 5th or whatever it is, November 6th, they don't care if the economy, everyone realizes we're in a recession. They don't care if oil prices go up $1. I mean, they generally do not care. They just have to get everything the way it is. A lot of the spending has been targeted really for June, July, August, September. Really is where the big spending is all they're trying to shove it in a little October. But after then, because they wanted to put as much federal spending, government spending into the economy ahead of the election to make it seem good. After November 5th, nobody cares if the economy goes down. And so a couple of things I think are going to happen. I think we're going to have fiscal policy is going to tighten up in the next 12 months. You have to understand. I mean, this has been a policy. Quite frankly, every government administration in history has done the same thing ahead of an election. They spend a bunch of money to make things look good, and the economy slows afterwards. But so fiscal spending is getting tight. Is going to be getting tighter over the next 12 months. But the Fed just laid out a case that the monetary policy is going to be easier, so they're easing things up. So if you look, what happened is when the Fed cut interest rates 50 basis points, typically if the Fed's cutting rates 50 basis points, people go, the economy is slowing down. Longer rates dropped. They didn't drop. The 10-year, interestingly, went from 3.6 to almost 3.8%. It went up, which is a little unusual. The dollar went down some, went up some, and it's just barely holding on to 100, above 100. The dollar index, Forex index is about 100. It's 1.42. If it goes under 100, then we have to sit there and look at this thing a little more closely. But that wasn't real positive because gold, if you look at gold, gold went up as well. And so these things are kind of telegraphing that, let me pull that chart up here, bear with me just a second. They're telegraphing that there's real issues out there that maybe this 50 basis point thing isn't going to help out. If you look at gold went from 575 up to 26.46. That's about almost $75. So that's a pretty substantial move up for the week. And so when the Fed cut rates 50 basis points, long-term interest rates went up and gold went up. So this is telegraphing, hey, wow, maybe this could be more inflationary than people realize, and that's what these markets are seeing. And so this is something we want to watch and see what happens. But you're probably looking at almost a 3% move in gold up. Interest rates went up as well. So that's not. It didn't react as positively. That wasn't a positive for the market. The fact that longer term rates went up. And if you had to ask me, we think longer term rates are going to drop off over the next couple months. this year, into next year, then I think they start going up, and I think we own some longer term treasuries, kind of trying to take advantage of that. But we're watching this very closely. This is not a long term bet because I just think they're going to have such the spending. I keep going back to the $100 trillion to $1 trillion worth of additional borrowing the Treasury is doing every 100 days, and I'm like, how does this not end badly? If you look at it, the percentages of deficit spending to GDP are about 6.5%, which is we rarely have seen that. Typically you see that. I mean, it went over 10% during COVID. That's like World War II levels, and then it dropped off after World War II. This doesn't appear to be dropping off. The Biden administration had a golden opportunity, to cut back the spending pretty quickly when this inflation was raging and pull the economy back. But they're like, this is it was the greatest gift anyone's ever given them. They can just spend as much money as they want. Remember Remember the modern monetary theory put forth by the Harvard professor? That you can spend if you control the world's currency, according to Stephanie Kelton at Harvard, professor, you can spend as much money as you want, and deficit spending does not matter. And they all believe this. They took interest rates down to zero on Fed funds to zero. The 2-year Treasury at one time was at 0.5%, and now they've exploded higher. Inflation has exploded higher, utterly discrediting these people. But in order to rein that spending in, we're going to have to see a crisis. So the question you have to ask yourself is the stock market is at all-time highs. So what do? You got the election coming up in, 45 days or something like that? I mean, how does anybody think this is going to be smooth sailing for the next 45 days? And there's no telling what's going to happen. If you look at the from 1960 to up until this year, we had one assassination and 2 assassination attempts against the president. In the last 60 days, we've had 2 assassination attempts against the president. There could be more. This is clearly a very unstable situation. We have wars in the Middle East. We have wars in the Ukraine. We're threatening to give. The only thing that we haven't given as near as I can see, the only thing we haven't given the Ukrainians are nuclear weapons, and it wouldn't surprise me if they decide to do that. It's a very unstable world, and in that world, I think you have to be a little more cautious. So some of these other things are moving up, these more stable type of situations. The precious metals, the commodities, because again, in a world of out of control spending, in the world of free money everywhere, that's telling you that everyone's going to print money. It's either going to be a deflationary crash or it's going to be inflationary. The easiest one seems to be the inflation. And if you look at most inflations, they run in cycles where they go down and then they go up on about 3 year cycles. And if you look at the inflation really peaked about a year and a half ago. And so really these numbers, it was 22, 23. Yeah, it's almost 2 years now, coming on 2 years, and so likely you're going to see this inflation go back up, and that's what I think. I think the thing to understand is that's the most likely way forward. I mean, if you look at these deficits, if you look at the deficits. During World War II, they hit 12% under the Roosevelt administration, and that was keep in mind that was They averaged about. That was with a depression and a world war. If you look at under Trump, they were 6.6, but keep in mind the economy was shut down, so they had to massively raise up the spending to stabilize the economy. And understand, the United States put more money into their economy as percent of GDP than any country in the world. But under Biden, which is COVID was gone, the economy is booming. We had some inflation. We had inflation, but the economy did reasonably well. We had a 3.6% unemployment, really good. They're running 7% GDP's deficit spending to GDP. That's extraordinary in a good economy. What's going to happen in a bad economy? If you look, the deficits always go up about 3% of GDP in bad economies. Well, what's going to happen? You're at 7. What's going to happen when we go into recession? And this is the big danger they got. This is why these different metals are telegraphing a positive thing. This is why you want to diversify. Anyway, a couple things to think about. By the way, an interesting thing, Apple Computer this week, Apple Computer Friday, was watching Apple, and the stock suddenly sold off 4 or 5 points right at the end of the day. They ended up with a massive volume of about over 400 million shares. And you got to wonder if the possibility that Warren Buffett reduced the rest of his position, enormous volume, unlike anything, that was just completely off the charts. A volume. It happened right at the end of the day, which was likely option exercising at the time, but this is something we want to watch, and will that affect the markets? So a couple thoughts. I think you want to be defensive in this environment right here. We tend to run portfolios with higher levels of cash, and then we try to get in specific sectors that we think are going to do well, and try to keep up with the market with less risk. And I think the strategy is working. Some of the areas, again, are electrification. The copper is going to be an interesting thing. There's all types of different ways that you can make money, but not being in the Magnificent 7, which are the tech stock, which is 30% of the S&P 500. Those companies are in trouble. So anyway, you want to continue to keep your bonds shorter terms. You can lock up for 2 or 3 years, getting 4%, 4.5%, 5%. That's not a bad place to be. A defensive plan is in place because we live in a very uncertain world, and this is going to rapidly change coming up with the election, what's coming up after the election, the crisis, the spending crisis. It's all going to roll out here, and you want to prepare for it ahead of time. If you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. Sign up for our free newsletter. We're going to be putting another one together. This is a completely free newsletter. It's private. We don't call you up. You're not getting a phone call or emails or anything. We just send out the report once a month, and that's it. And if you need some help managing your retirement, that's what we do at Max Out Savings Advisors. We use our value investing approach to the stock and bond markets. We hold your assets at Charles Schwab as our custodian, and we simply manage them for you. So if you need some help, go to the website. You can request an appointment. We're here in Houston, Texas. I'll be happy to sit down and help you. I'd like to help you out. Just go to the website, maxoutsavings.com. Until then, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth. We will get through this. It's going to take some time. It's going to be a challenge, but you want to navigate successfully through this. But if you're cautious, conservative, you will come out ahead. So anyway, I hope everybody has a great weekend, and we'll see you next weekend right here on the Max Out Savings Show. By the way, you can listen to the podcast by going to 1070 The Answer, KNTH 1070 The Answer, and catch our podcast if you want to listen to repeats. We're also on Sunday at 7 a.m. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka.